Hey, good afternoon, everybody. Got a couple people. Do I see Mr. Brian on the call? How you doing, sir? I'm just going to keep talking to myself. I feel like that's way more effective. We'll just give it a couple minutes here, wait for some other people to join. There, so I got a smiley face. So hopefully, so that, I'm just trying to test to see if my mic and stuff is working. Is this thing on? All right. So I did extend the invite to a couple other people here. Some of the people with accessory to Inner Circle, also also in the PAM channels. So we'll see. Welcome. All right, so this is being recorded, just so you guys are aware. If anybody has a problem with that, please let me know. But there's been some good feedback on people that people that join late or people that aren't able to make it because they work full-time jobs. Just kidding. Sorry, I'm in a good mood. It's Friday, making some money on some shorts. But I guess the theme of the call is a little bit more serious today. I know that some people have some trapped long positions, and they want to, they at least want some guidance, or at least to figure out what might be what might be a good solution or an approach. Of course, I can't give advice, but what we can do is we can talk through scenarios and situations, and we can shake out what's a good course of action. And again, everybody's portfolio is different. I have no way of knowing who has what positions where, and I don't, quite frankly, don't want to know. I don't know if I can know. But I guess the long story short here is I want to make sure that you guys feel like you have the opportunity to ask some questions. You're obviously showing some interest here that you want to, that you want to further your education on this specific matter, and hopefully it helps. That is really the main takeaway here. All right. So with that being said, any questions or anything that you guys wanted to cover? Just taking some notes here, just in case. And again, like the main topic here would be exit strategies for like trap positions. Anything else? Right, don't everybody talk at once. I can't write that fast. All right. I crack myself up all the time, So it's the only way you can do it.
Hey, Gates, if you don't mind, can you give a quick rundown of how to draw charts on TradingView? And
How to what? Sorry, you're a little muffled.
how you draw the EW projections on TradingView? You can just give us a quick rundown on that. How you place the levels? That's where I always have the confusion. How do you mark the start point and the end point? Because if you choose the end point, then you get different percentages, and that can mess up the interpretation of your levels. So if you can just give us some guidelines on how you chart, how you do the charting currently.
Sure. Yeah, and that would be to be honest, I think that's probably a good setup here to set the foundation. So let me share my screen here, and you guys should be seeing my TradingView screen. All right, so I'm starting out with a clean chart today. This is so to kind of refresh here, that's the question that we have here is like, how do we identify the levels? How do we how do we draw the wave patterns and things? So just as a quick refresher on that, there's two specific tools that I use. So one's like the fib retracement tool, and another one is the trend-based fib extension. So the fib retracement tool is used in the special circumstance where we're seeing a retracement of the entire range. So if you're new to wave theory and things like that, wave theory in conjunction with with your Fibonacci levels is a very, very powerful combination with trading in general. So sometimes, we hit these levels right on the mark, and sometimes we don't. But we won't be talking too much about fib levels today, except for where we can identify bounces and things. So, so if you're looking for retracement of the whole range, and to see where you might want to try to draw like termination points and things, you also got to kind of take a step back. So, for example, if we look at the larger grand scheme of things here, you try to identify like what patterns you can see right away. At least for me, like, coming out with a clean chart, I think is, clean chart is good just to start out from the beginning. I think there's a Sound of Music joke in there somewhere, like, starting at the beginning is a very good place to start. Man, I got to work on my jokes. So, anyways, right away, you can see that there's some sort of, like head and shoulders pattern that's coming out of this. And, this all adds additional context to how you want to chart this. So we have this line of resistance here, and it doesn't need to be exact. There are certain, like 2 days here where it busted above. I consider that like a false breakout. But I guess the most important piece is when we're drawing. So now that we kind of see that this is a head and shoulders pattern, what we want to do is we want to try to figure out what really is the next step for this. So not all patterns are not really created equal. We do have some chart tools, like if you use TradingView. If you don't, by the way, send me a DM. I think I can get you a deal or something like that. But TradingView is, in my opinion, the best charting software out there. I've used a whole bunch of others, but I really I love it. It's great. It has every indicator, anything you've ever needed. It's all in one place for one fee. And I think the fees are reasonable, especially around like Black Friday. They give you like half off a subscription. Anyways, back to the matter at hand. So right now we're kind of looking at this head and shoulders pattern. You want to draw this bottom neckline. So what you also see with head and shoulders patterns is that that's typically the end of an impulse. So you have a couple schools of thought here. You could make the case that this entire run up here is just an irregular sort of correction, and it's sort of run its course here. But you could also make the argument that it's a bullish 5-wave sequence, and we're seeing a wave 4 right now, where it would look something like this. So something around these sort of things. Now we don't know if that's actually going to be correct. The only thing we can really do is just deal with what we have at the time for the information that we have. So what I would suggest here is, if you're trying to determine levels for pivots, is to really just zoom out and get the grand context of things. So we're at the daily level, and each day seems to have a theme. Is it net selling? Like today's a trend day, so don't try to step in front and catch the knife sort of thing. And then you also have some other characteristics of days, like you have consolidation days, you have days where bulls or bears try to break out of support or resistance. So long story short here is that once we determine kind of where we're at, which with wave charting can be subjective, I'm not going to lie. There are some people that say you're just drawing lines on a chart. Well, sure, okay, but the rationale behind that is you're really just trying to forecast the next steps. So there's usually 1 or 2 or even 3, sometimes 4 different scenarios that you have to be mindful of as you're trying to chart these things. So again, I'm not trying to be long-winded. I'm trying to set up the answer here for how to draw these things. So hopefully I'm not talking too much. But anyways, now that we've determined that this is a head and shoulders, at least what it looks like today, now what we do is, so instead of using this, this trend-based, sorry, not trend-based, instead of using this tool, which is the fib retracement tool, this is something that we would have wanted to use a couple of, I guess like a couple of weeks ago, really, where we see that this is all headed down, and then we want to see how far it can bounce back up. So typically, so let's say you bought when we had some sort of consolidation right here, like right at this 1900 level, and this is just an example. I'll go through I'll go through this in a little more detail with some more, zoom in with the chart patterns. But right now, what's happening is it's bouncing, or at least it's grinding on top of support. So, the left shoulder here that we're seeing is really acting like a rest for this. But I don't think it'll last long. I think it's already, punched through here. We had some consolidation, but this is still a high level view. So let's dive down into more like the 2 hour. And for the chart enthusiasts on the call here, the 2 hour is really a good place to start after you've gone into like the daily view. That's just because like it gives you slightly more granular information, and it also gives you an opportunity to kind of test your theory and your wave patterns and things. So to get back to this setup here, we try to use these the fib retracements to determine how far back something's going to pull up. So typically, if you see it if you see it bounce off this 50 level, you see consolidations, all over these different fib levels. And as I'll zoom in here, if you guys remember a couple weeks ago, we talked about it on I think it was another live stream where we had we were just talking about like, okay, well, a wave 4 pullback back when we were thinking that this was going to be a 5-wave down series instead of like an ABC like this. So what we're thinking here is I was going to bounce off, and then we'll make a new low. Well, that didn't happen, and went up higher, of course. And the next level up is really this 0.618. And one of the key things to look for if you're going to try to place a trade, either long or short, is look for if these Fibonacci levels get punched through. So of course there are different rules, like where to draw the peaks and troughs, like especially if you're in specific waves. Typically, what I do is try not to overcomplicate it. So you just draw it from peak to trough, and that's your normal retracement. So you can see, we may have, well, okay, sorry, there's one exception here. That's good to know. So you still want to take a look at 2 levels. So when you draw a fib retracement level, you want to put it at the top of what you think is like a wave 2, or anything that's really like the last or the second last peak. Not really the ultimate high, and that's where you start, and then you continue to move it up if these levels get violated. So really have like 2 drawings on here, and I try not to show both drawings because it confuses people, which you guys are probably a little confused at the moment. But these levels matter, I guess, until they're invalidated. So when I do some charting and things, I just make sure that if we're seeing some bouncing like right at these Fibonacci levels, then that's typically a good sign that others are trying to either defend the level or there's a wider plan in the works here. So with that being said, if you're picking levels to if you're picking levels to want to enter trades or exit trades, you really do have to understand some of the structure. So I would highly recommend looking at some books like the Frost and Preacher book, which is the Elliott Wave, sort of like the Elliott Wave Bible. Robert Ballin has a great book that's for free. It's a PDF. You can send me a DM or something, and I can hook you up with that. I got a copy. But yeah, so there's a bunch of different resources that you can at least get a good sense of like patterns. And there's really, I'd say, about like 45 patterns that are 90% of what you see in markets. I mean, 40 patterns, that's not so bad, guys, right? I mean, you can learn those. I used to have, posters up on my walls that would have, all sorts of patterns like pennants and flags and things like that. But the real takeaway though, is once you get better at recognizing patterns and once you recognize where a good entry or exit's going to be, then you have to exercise that patience, because again, each day has a theme, and each day has like a, like a start and end, of course, with the bell, of course, but there's always positioning that happens towards the end of the day or the end of the week, really. So Fridays typically are bullish, and that can carry over into Mondays. However, on days like today where we have some selling, it's not, 2% is not good for tech, but it could be worse, right? It could be a 3% day, 3.5%, but typically you don't see days get more than like 2.5%, because then that tends to scare a lot of people. They don't get a lot of buying and selling and stuff like that. So once we've got, I guess, confirmation of a top, and I think a lot of people have questions about how do you know it's a top? Well, when you see a big sell like this, where it punches through, any support, and it looked aggressive when it was happening. A lot of people don't have time to sit all day in front of charts like I do, but just talking about data, my heart starts beating fast. It's another crappy joke for you. But really, I guess what I try to focus on is once you see some sort of rejection here, then try to determine what it is. So if you reach out to the top and then you would think, okay, maybe this is a pullback. Well, if it's a wave 4 pullback, like I think a couple other people were thinking that this was going to be correct. Well, turns out it wasn't. So you could have had like a pullback like this, and how you measure that is really just based on the regular, regular rules. And as we just reviewed here, as we just reviewed, there are you start at that wave 2 bottom or top, which is what we're just showing up here, and then you draw what the pullback levels are. So typically a wave 4 will be traced to 0.382. However, in an uptrend, you don't really see that a lot. If you see an extended wave 3 like we did on the way up, or extended wave 5, the market's still very bullish. And how you see that happen, or how you see that materialize in price action, is when you're watching it. If it just looks like markets are a little heavy, like you're starting to see volume increase here, with just your daily volume in general, and you're seeing a convergence of selling and volume. So that typically means that people are selling into the rally. So those are these little like tea leaf things that you read as the price action is occurring, that helps analysts like myself kind of parse through the volume and price action and kind of determine what the highest probability, I guess, path is going to be. So for this situation here, a couple days ago, what we were thinking is that we had a big bounce right here, or at least what people thought was a big bounce. Well, I wasn't so sure about that, just because again, we started seeing some more aggressive selling, and this was after we had several days worth of just nonstop buying, but also knowing that we were starting to form this sort of top here. As you can see, this to me is another very clear head and shoulders pattern, where you can still see mini head and shoulders everywhere, right? And this is a classic sort of move. So just seeing that again, you start to think that, okay, well, these patterns repeat themselves, so why can't this be a larger head and shoulders? As we I know a couple people just recently joined the call here, but I'd drawn out here before that this is looking like a head and shoulders, here on the bigger time frame. And what else is good to know is that, so now that this wave 4 here, like you could have bought down here, and what you could have done, I guess, for a strategy is you could have set a stop and then move up that stop as the prices increase. And I kind of simulate that so let's say you buy around here thinking, okay, 0.382, that's a wave 4 bounce. And I think, a lot of people thought that as well. So then what you do is you draw a retracement and then you see how high it goes. It's going to go higher than, 0.236. And you just, like you look at these point of controls, which is this dotted line here at 19,540. That one, so like everything hit this 0.618 and couldn't really get above that. So that's where I started to think here, like, okay, well, if you had longs and they're still pretty underwater, what you could do is you could hedge them, or take a loss. That's kind of a lame way to do it, but it is what it is, because these could be longer term tops, and you don't want to be trapped, because being trapped is awful, and you lose sleep. You got all sorts of problems that come with it, including loss of capital. So really, I guess, an important thing to keep in mind is really that risk management. So if you're starting to see things that look like sluggish price action, where it doesn't look very bullish like it did a couple days ago, the next thing you want to look for is a breach of that low. So once we breach this 0.382, that immediately tells me that we are no longer bullish. That I wouldn't say long-term trend, like, last year and a half, the way up. We just don't know yet. But what we do know is that there's a lot of selling that's happening right now. And now that we've had the price action from today, we can clearly see that they're selling right through this larger Head and Shoulders neckline, and it did not survive the retest, not even close. So yeah, I mean, it's looking kind of brutal right now, and that's. But I hate to say it. I mean, the warning signs were everywhere. Posted in a couple different places. Not trying to go down that path like, oh, you coulda, woulda, shoulda, because hindsight's always 20/20. But one of the things I'll caution you guys against is going long too early or going short too early. I love to go short too early. It's just a fun thing for me to do because I like to carry losses and show everybody that. Just kidding, of course. But no, the reality is it's difficult to pick your entries and your exits. But using like the fib retracement tool, I think is a very good point to or a very good place to start. But just having a couple little rules in your head, like if price goes below a certain Fibonacci level, then most likely it's going to hit the next one down. So for example, we had several days of consolidation right at that 0.5 level, and that's where I think a lot of people were buying in order to capitalize on a bounce like this, where you could see or where it can make some sort of irregular correction with a higher top, and then fall back down. But one of the other clues that we had that would not really materialize as of yet. I still think that today is kind of the nail in the coffin for the bullish thesis here for like a new high. That doesn't rule out a bounce, but we'll talk about that in a second. So one of the other clues that we had that this was going to continue down, Alexander, I will mention the fib extension tool here in a second. Just trying to cover some bases here for your question. Sorry. So what some of the clues were is that this first leg down seemed to be an ABC, and we knew that after this wave four broke up, which is what we talked about 10 minutes ago. So once we saw that break up, then what we're looking for here is another ABC, because this is not necessarily. I guess it helps us determine what the style of the correction is. So there's a couple different flavors of corrections. There's like a zigzag, which is a 5-3-5. So something like this, and then you'll see a ABC up, and then you'll see another repeat down here. Those are the most typical sort of corrections. However, we do see other corrections like a flat, and you could definitely make the argument that this is a flat, because flats typically are it's a 3-3 pattern followed by a 5, and how that would look in this sort of situation is something like this. One moment, please, as I illustrate. So you could make the argument here that this is a flat, I mean, it doesn't quite get above. A flat could also turn into an irregular flat, which just means that it has a higher extension, or like makes a higher level. But then what comes after that is a 5. So after that, you'll see a pretty big rip down, which will then exceed the floor that we put in the last time. So that's the general thinking behind it. If you have a 3-3-5, like a flat correction. Now we haven't really seen that yet, but what we have seen so far is an invalidation of at least like a 5-way pattern up for this right now. So that just means that maybe bulls are too early and the selling's not done, or we actually have seen RB wave top, and we have seen let me make the change. So this is what sort of looks like here, and because this is a ABC sort of move here, and then you can make the argument that this is an ABC, just a very extended C leg. we might see something like this, where we'll see a bounce, a back test of a trend line, and then, and then we could see just something like this, maybe with an extended C leg. Now it kind of seems to fit, right? Like one of the things with charting that I like to express to people is that you don't have to get so scientific about it that you don't have any flexibility. Flexibility is very important when you're charting, especially if things don't go your way. You have to be able to pivot quickly, or else you lose money by leaving it on the table or not hedging, thinking that it's going to reverse, and that's where people get in trouble, and ultimately, that hurts your profits, or at least your longer term profits. And it's one of those top three things I think that psychologically is a problem for a lot of traders. So the next step that we want to take a look at here is yeah, that's right. Yeah, when in doubt, hedge it out. Perfect. I love it. So now that we've clearly sold through the larger range here, this 0.5 retrace, that I considered like the bifurcation point for the range. And what I mean by that is, we could see. So let me just draw a line here. Typically, on longer term charts like the 2-hour or the daily, you will see these bigger pivots, but they take a couple days. So you saw, like we saw some consolidation here, thinking that the bulls were going to push it up. Well, it got sold down from the unemployment data today, which you kind of speculated was going to be a little weak, or the payroll data, and even though unemployment ticked up or ticked down 0.1% or whatever, it still doesn't matter. You had revisions to payrolls, the past couple months. That just shows weakness. So now that we know that this has fallen through the 0.5, the bifurcation point is sort of like this, where it's like a confirmation almost of the next sort of the next sort of moves. Well, it's not perfect. Nothing is ever perfect for an indicator. It's not really an indicator at all. It's really just more of experience, looking at charts and kind of seeing what works and what doesn't. The bifurcation point at this 0.5 level, I could probably hear you asking already, like, well, why did you pick the 0.5? Well, I picked the 0.5 because we did see the same thing here on the first leg down. And because this is a ABC in the longer term, most likely we are going to see, or we would have seen something like, because this is a 5-wave down, we most likely see something like this, but it should have like a deeper A wave. And the reason I say it should have a deeper A wave is because that's really like if you're going to move the market, you need to do a lot of market sells, and we see a lot of volume that's heating up here on the sell side. And as you knife through these levels, that's where you start to see some less buying enthusiasm, but there will be some sort of consolidation. And because we were talking about like on each day has its own theme, I guess you can make the assumption that by the end of today we might hit this 18,277 level for the Nasdaq. And if it does that, then most likely we'll see futures push up the market on Sunday night, and then Monday we could see a continuation of that, and possibly even like Tuesday, Wednesday. It just depends on price action, or what we could get is complete disaster over the weekend for some place in the world, and it just continues down. However, I don't really think that'll happen. I think that there needs to be some sort of covering bounce, because a lot of the bigger players went long here, thinking that it was going to push up some more, and they were mistaken. So, anyways, long story short, with this is you just want to make sure that you're trying to take some of the rules and think about it like an if-then sort of proposition, where if this happens, then this is the most likely path after. So hopefully that makes sense. I don't want to spend too much time on it because I want to get to the smaller chart. But yeah, suffice to say here that since this 0.5 level has been broken, we can assume that we'll see another, at least I think this is the higher probability scenario, probably like a 70%. But again, not advice, just be aware that this is a likely path considering what we've seen before, and to try to extrapolate that into the future. So now let's take a look at how far this can extend. This involves the use of our other drawing tool. my favorite. You all know it and love it. It's called the fib extension tool. Guys, you really got to stop laughing. I'm getting a lot of feedback on my mic. Yeah, I see a smile. I got one smile. That's good. Jake's laughing. He's got it. All right. All right. So Alexander, it's taken me a half hour to get to this point, but it was a very good setup. That was a very appropriately timed question. So what we want to do here to figure out how far things are going to go. So now we know through retracements and that the first tool that we were using, that the 50% is really like the at least for this specific range, this specific last couple of weeks here, that seems to be the recurring pivot point. So what typically happens with these with these corrections is you see these tiny little ABCs everywhere, and I often get the question, well, what comes next after that? Well, a bigger ABC, that's what comes after that. And so that's why some people can get tied up in like criticizing weight theory just because it can be subjective. And that's true. But also I think it's a very effective tool for forecasting and a capable, in the hands of a capable user. So that's, another thing we like to try to stress at the Gains channel is, really just individual education about where's a good entry point and exit point. So now that we kind of figured out, all right, well, there's a higher probability that we're going to see a decline versus a longer term sort of bounce to position for and go pretty heavy long. Anytime you see something like this, you just want to be careful. Like ease in. The water might be warm, but the heater might be broke. So you want to kind of ease in and make sure that if you're wrong. And we do decline to, let's say, this 18,184 level for the day, or something like that. You don't really get blown out on a brand new position. But typically on days like this, again, it's a trend day, so you'll want to wait to the end of the day to see kind of where things end up. And not in a couple minutes here, I'm going to zoom in a little bit more, and show you kind of like how to kind of read how things are going to roll up into the end of the day. But I guess from a measurement standpoint, when you're talking about, or when you're thinking about entering and exiting positions, now that we've seen this sort of confirmation, at least consider a confirmation that the bear scenario is more likely, you still don't want to step in front of the freight train here until you have like a key level that's hit. And with the retracement that we drew before, that level here, at least for today, what I'm thinking is that this 18,281 level is a good place for the indexes to bounce, and you would see something like this. And like I said, I think Monday or something like that. It's this range here. Let me draw it. It's this range here that you can make a decent amount of money on, in probably 2 or 3 days if it happens. Okay, so the big question is, what happens if it continues to decline? Well, I still think that we'll get, like, futures typically bid up the market and sell it down in the morning, that kind of thing. The same thing with it's the same thing with futures when you're in a bull market, where you typically start the morning out low and they buy it up throughout the day. That's just a way of buying low and selling high if you have a lot of shares to buy or sell, at least for institutions. So again, what we're looking for to close out shorts here or add hedges for longs is right around this 18,300 level. I don't know if we'll see it today. Maybe we get close, or maybe what happens is right after close, if they really want to hit it, they'll flood the market with some aftermarket sales. And sometimes I think you saw that like Tuesday, something like that, where like we ended maybe 0.2% away from where we closed after hours, and that's kind of by design. These guys want to hit a target where they can work with their brokers and those close positions or open new ones, that kind of thing. We don't really have that luxury just because we don't have big lots to trade. So so I guess the retail way to do it is to just kind of wait until end of day and see kind of what happens. Sometimes on Fridays you see short squeezes, but those typically start at 20 minutes too, so about 5 minutes from now. And I mean, you might see one today, just people trying to buy the dip going to close. But I still am a little skeptical because we're not really at a key level to stop at. Now, if we look at something like stocks, oops, let me pull up a different. Sorry, it's cluttered. 1 second. It's hard at work. All right, so something like stocks here, you see that with this retracement tool, it stopped right here, or really, really close to this point, 786. So we're right at like 204, 205. It's not so bad. But I think by the end of the day, this will most likely get hit. And that's just, going by gut feel. There's really no scientific explanation for it. Just, staring at charts is really the best way to kind of get good at that. And also too, you want to look at these different chart patterns that show up. Like we had a little triangle that developed overnight here that could be considered a pennant. Which, for those who are savvy chartistas, I don't even know what the name is to call us, but we're all really good looking and really good, right? So, anyways, so typically you would see a drawing here, when this broke out, where you could see a retest of this low, and conveniently, it aligns with this this head and shoulders pattern. So even if we did see a tiny little new low, that's okay. Like maybe we see something like this, and the C leg here wraps up right at this key support level, and then you could potentially see a bounce, like a longer term, more sustained bounce. Let's say to hit this point of control, but then ultimately turn back down again, and that depends on many different things, of course. But I will say that there's a lot of I've been asked a lot about NVIDIA, and just looking at this chart, or people trying to be bullish and say that we're going to bounce. Look, guys, like the number one stock in the market doesn't go down 8% in a day if you're in a wave 4, nor does it go down 8% if you're in an uptrend. So I just want to say, be smart about it. Don't be dumb. But in a nice way, so you guys keep dialing into my calls. But anyways, like the writing is on the wall once you have more than a couple % of a sale on a stock, if something is not motivated by, let's say, earnings. So earnings did not go well for NVIDIA, even though they over-delivered on profit, but still, they got beat up. And that's also why I think like semiconductors are falling as well, just because across the board, we see a lot of that. But the reason I wanted to show that is just because we're talking about like entries and exits, right? So if we're looking at how do we enter, how do we exit this? So let's say, as an example, you got trapped. Oh, I'm sorry. Before I can do that, that's the next stage here. Let me finish the extension conversation. Sorry, I talk fast. Got to keep up, guys. All right. So we draw this little extension here, and this is where the larger pattern we usually draw it. So the start is from peak to trough, and then whatever the pullback is that your third point. So the reason you draw this up here and you measure the whole range is because with a flat correction, most likely you'll see a wave equals C, and that's really easy to determine. Once you draw this tool. And once you start to get really good, then you can start to guesstimate where this 100% is going to be, and then you can post some charts and stuff. It's fun. But you can kind of see here that this looks very symmetrical. Now, typically in a big downtrend or a violent sort of downtrend, which I don't think this really is right now, it's a slow, steady grind. But you can see, like in a zigzag correction, remember that was the 5-3-5 combination. In a zigzag pattern, that C leg might extend down here to this 1.236%. Now, let's also take a step back here and see what's realistic. I would argue, let me go to the 4 hour. And again, this is all in service to helping you guys try to plan trades and enter and exit and things like that. Because if you're thinking that the market's going to explode up and we can all go long and just go cut the grass and not have to worry about it, I think those days are probably numbered. Yes, the markets go up more than they go down on average until they don't. Until we've had 18 years of this, 17, 16, something like that. We've had a lot of years from the bottoms that we saw like in 2008, 2009, and it's been a slow slow and then accelerating, sort of move up. And there has to be some steam that's blown off of this market. And there's a couple different possibilities. Like, you have to consider, like, news doesn't really matter. News is always it's cited as the catalyst, but it's really more of the answer that people are asking questions to versus why did it actually happen. And I'll explain that a little bit. Like, some people really like to listen to the news and say, okay, well, tomorrow's whatever report's coming out tomorrow. That matters for commodities, but major things like jobs, unemployment, payrolls, Fed news, that kind of stuff. That's what drives the market, not necessarily, like an embassy gets bombed somewhere else, that kind of thing. I always like to parse the public chats and kind of see what sentiment is. If people are just blindly bullish, then you start to think, okay, let's read some volume and let's kind of dig a little deeper. Because usually, the sentiment is like, once it gets to that point, it acts as an accelerating function, but it's not necessarily the whole story. So let's say that this is a, kind of return. Let's say this is like a zigzag correction. You might see this C leg extend down to this 1.236 level. And that would also conveniently line up with some support that we had after this, seemingly, wave two on the larger scale. Now, longer term, this could be a wave four, and longer term, in alignment here with the conversations around whether this is a flat sort of correction or not. It might be the case. So if that is a flat correction, then we want to kind of see where that might end up. So we can also assume here that this is like a wave two. So that very well might mean that we see, we could see a 5-wave impulse off the bottom here, and that could give us a new high. But I don't think we'll see that before the election. I think that there's too much time here, and the seasonality is, quite frankly, sucks in September and October. So even though we might see like a new high, it's not going to happen today. That's a guarantee. So the reason I want to try to illustrate this is that even if you are bullish overall long term, that's fine. That actually might be correct, but not today. So today we're trying to figure out what's happening and how far this current leg is going to go, and what are those pivot points? Because again, this this whole exercise here is to discuss entries and exits, but you really can't understand how to enter and exit a position unless you have knowledge of the grander scope of things. Where are we at the daily level? What is the volume looking like? What are the trends looking like? Those are all things that kind of go into this, buffet, if you will, of this Vegas buffet of lines on this chart. Well, they all mean something. And another thing I'll say too is that you really have to be comfortable with your own system and your own methodology. Everybody has a system. I see Kristen on the call. Great. She's really great with seasonality. She has an awesome system, trades it really, really well. She's also a master at it. I do waves and waves in Fibonacci levels. And, I really like it because it seems to give me good results. And if something isn't working, you want to fail fast, right? So if you have a system that sort of works, and maybe you're just being lazy and not reading books, or, just like kind of, half-assing it during the day, like, that's okay. It might work for a while, but you really want to give yourself every advantage that you can. You don't want to be contrarian unless you're sure of something. And even if you're sure of something, that's still bias. But I guess the main takeaway here is that if you have a system and it works for you, get really good at it, because that's the only way that you are going to be successful long-term. Not day trading and getting lucky several times in a row. You might, but statistically, it's probably going to be a little difficult to keep that consistent. And also, you don't want to lose sleep at night. So you want to do something that's going to be profitable for you, and also fits with your style of trading. So overall, I guess what I'd say is you have to answer some tough questions about yourself. Like, am I a day trader? Did I take profits too early? Do I go short too early? Yes, guilty as charged. But do I go long too early? Now that's where I think a lot of us get into trouble. And that's where I really wanted to try to dig down and focus on today, was that, if we're looking at, let me go down to like the 5 minute. So let's kind of look at what happened over the last couple days. And let me do like 15 minutes. There we go. So let's look at what happened over the last couple days and where we might see some sort of relief. I think we can pretty clearly say here that this is an ABC, and conveniently, because it's almost end of day Friday, I mean we're really close to those levels. And another thing too is that like these C legs, they typically don't extend past like a 1.236 or the 138, but they can. And since we had an extreme one on the way up, this whole section up here, there's no reason why you can't see two times in a row. You typically don't see everything 3 times in a row with the markets, but 2 times in a row, is pretty likely. So if you can draw this ABC here, that's where I was at least initially projecting that we would bounce. I think that like that 50% retrace is around here that we talked through. But so if you went long, let's say you went long right here. Let me mark this 1 second. Whoops. So let's say, oh, come on. Sorry, 1 second. All right, let me get this out of the way then. Moving too fast. All right, so let's say you went long right here, thinking this is going to be a good deal, thinking that okay, we broke the trend line, whatever, but it's going to recover, that kind of thing. That's really your first sign that things might get in trouble when you saw the rejection from the trend line. But you would have also had to had that trend line on your on your chart to start with. So if you're not good at charts and stuff like that, I mean that's hopefully what like I can help with, right? So part of the service is you have exposure to these charts, and you have these lines that are drawn, you have the commentary and things like that. So you also want to combine that with your own system, because the charts are like a guide. Okay, it's a Elliott waves are like a compass, and your charts are sort of like your charts are like sort of navigating the stars. When you're sailing around the world in the 1800s, you just have some lines or some stars in the sky to get you thousands of miles across the sea. But in our case here, if we adapt that sort of mentality, it's reading those tea leaves here to try to figure out in the longer term where the entries and exits are, because that's where you make the big money, not necessarily on the intraday moves, but by going long or short at these big pivot points. So usually when you see consolidation, the length of consolidation determines how far the move is going to go. So you saw consolidation like up here, and this took us, I don't know, a week, I guess. And typically you don't see consolidations last longer than a week if it's a B wave or a wave 2, that kind of thing. And usually all that, usually everybody's got their cells up here. But so if you bought up here and let's say it's at this 18,800 level, and you're a little worried that we're going to continue down, I would say market moves in waves, of course. And what you're looking for, 1 second. What you're looking for is this sort of move, this sort of bounce. And again, we know this, or at least we have a high confidence in this, that even if it dips down a little bit lower, if you just eased in, okay, like if you're just starting a downtrend, and again we just saw that we broke this, the potential wave 4, that means that it could be a little deeper. So maybe you just go in with a 1 unit or 2 units, that kind of thing, depending on your account size. But let's say you go in with a couple of bucks, and you settle you settle just you have a smaller long position here. You can a couple different strategies is you could add more at the end of the day, like today, for example. I'm in a couple minutes here I'm going to publish an order that that buys a 50% hedge on my shorts, at least in our fund here, in the gains fund. If you're not a member, by the way, today only, give it a discount. Here, before I forget, let me send the link here. If you guys are not part of the service, I got to give myself a shameless plug here. Doing this full time, so kids got to eat food. All right. I know they eat too much. I don't know why everybody. My kids got to eat more than once a day. All right, there we go. So yeah. Anyways, it helps me out, guys. Most people make their money back within a couple of. Thanks, Jake. Yes, awesome. A couple of people, make their money back in a couple of weeks. If we have a good month. So, anyways, we also have fun too. So back to the presentation at hand. So what you're looking for here is this B wave. Now, if we get in a situation where it seems like we're going up, but it's just looking sluggish. Like we keep bouncing against some some ceiling. We can draw trend lines all we want. We still, if you're still in a channel, that's where it gets a little difficult. So, I mean, you don't typically see like these expanding megaphone patterns on the way down. It's just to try to illustrate a point that, if we're still within this sort of range, anything that breaches this lower trend line, then that's an acceleration that we're breaking down from the range. Anything above the trend line, and you can draw 2 in this situation. I think, it looks like we got 2 for a channel. Anything that's a breach, you can consider bullish. But for right now, the main resistance that you're going to see is this trend line that we have drawn here, this neckline. In my opinion, this is a very, very easy trade. It doesn't get much easier than trading flags and trading breakdowns from head and shoulders patterns. For example, let me show you the Dow. I did not have that. One second. Okay, yeah, here we go. Perfect example, just on a smaller scale. So today, really today. So we saw, this is a, here, we just draw this out. So you got these shoulders here, and another reason why I thought this was head and shoulders is because we're seeing them everywhere. We see some in small caps. I mean, this is a right shoulder head, or sorry, left shoulder head, right shoulder. It's the same thing. I think we also see it in the dollar. Yeah. A mini one up here. So anyways, if you're seeing them everywhere, then most likely you'll see them in a lot of different places. So to get back to it, we have, the Dow is a good example where it broke that neckline, and then even though it bounced up above its trend line, it still failed, and it still broke down. So that's why I still think that we have a little bit more room to go. Especially like with the Dow. And we might see that in a couple minutes here. I don't really know, but I guess what we're looking for here is that back test of the trend line. So now that we know that the pattern is most likely going to be bearish, how do we get out of these long trades? Well, kind of repeat from before, you either can add here to increase your cost basis, decrease your cost basis. So you could get out at break even or even at a profit. So what I'm planning on doing here is, if I go back to the Nasdaq, so what I'm planning on doing is, if I enter and let's say, futures sell down on Sunday night and we start low in the morning, most likely we'll start to see some buy up here. These legs down can be brutal, but that's also why we ease in, right? We be cautious and patient. So I'll add a 50% hedge to my shorts here. And what that does is that locks in half of my short profits for the day, because I still have shorts that are underwater. Now, if you have shorts that are in the green, just close them and have a great weekend, right? You could do that, or you could hedge them if they're underwater, 50%, or hedge them 1-to-1. But the risk that you run with hedging 1-to-1 is if we see further declines, then you lose out on some of that profit. But that's not necessarily a bad thing. It's just you can close your shorts and then your longs are underwater. But if we're going to see a bounce over the next couple of days or a week or so like that, then you could get to the point where you see, where you do see some of these, some of these long positions that will appreciate in value. So, markets are getting beat up here. Let me take a look. So what's happening right now? So hopefully I covered like the entries and the exits where you do have options. It's just a matter of I think the most important thing is just be patient. Be patient and read the signals that the market's telling you. Like price action right now, it's does not scream bull, does it? But being a contrarian helps sometimes. But we still want to position ourselves and normally make trades at the end of the day. You can make some intraday trades, but a lot of the action happens right at the beginning of the day or right at the end. And the reason for, I guess, the reason for all of that is just in general, position squaring. Like going into the weekend now, there's going to be people taking short profits. There's also going to be people trying to buy for next week, like us. So it's just a matter of trying to pick your timing. Usually the first low of the day is not the final low, especially on a trend day. So if you're still stuck long and you want to try to get out, you will have another opportunity. It's just you just gotta be patient with it. So again, you can add to your position to improve your cost basis. You can hedge or you can take profits, and then you don't need to worry about a hedge. But I'm assuming that most people are underwater on some longs because they went long a little early. I had to close out of some long positions that I took, but I was quick to do it because the price action was looking a little shaky. And it looked like a good decision now because I probably would have been $6,000 underwater by now. So I got lucky, right? Sometimes it's about luck. You could have all the charts and all the stuff in the world, and then one day you're like, oh man, blew that one. But it's good to have a little bit of a little bit of an ego check sometimes, just because you're not going to get it right all the time, but you can try. So I guess to kind of wrap up here, because I do want to get some orders in here before close, and I don't want to fat finger anything. I've lost a couple $1,000s by accident one day doing that. Long time ago, years ago. We won't talk about that. But anyways, hopefully that helps. And I will post the recording if you guys want to go back and look at it. I guess I'm happy to take some questions. And and if you haven't signed up for the service or whatever, that would be great. Do me a favor, my family would thank you. I even made this cool shirt for you guys today. Here we go. I'm the boss. Anyways, I thought it was funny. So with that being said, with just 2 minutes to close here, I guess if you guys want to type out some questions or something, you could do that. But right now I'm gonna post something to my channel, if you don't mind. Is this helpful, by the way? Oh boy. Let me stop sharing real quick.
Yeah, Gaines, super helpful. Appreciate it.
Fantastic. Good to see you, Brian. Haven't seen you in a while. All right.
Yeah, you too, man.
So let's just trying to close out some stuff quick. But so any questions, any thoughts, anything people have struggled with that's been difficult, or can always try to answer. Now's your golden opportunity.
Would you, knowing that there's less liquidity in the market after the close, would you even risk waiting to see if it pushes down more after the close to put some entries in?
Could you say that again? Let me make sure I got the right context.
If we're going to go one, directional trade for hedging, would it make sense to wait, get that trade in now? Or wait till after the close?
Yeah, it's
after hours.
It's a good question. So yes, liquidity does dry up after hours, but you can have an opportunity to get a better price. So perfect example will be today. So right now, let me just pull it up. Here, 1 second. All right, so perfect example here is just right at close. We have a push down to. I think they're gonna try to hit this 18383 level, but you still see that this is like a consolidation triangle that happened throughout the day here, and you can get lucky where you can pick up some long positioning, and you can you can really get to or like really get a good fill. So right now, yeah, I mean, it would be a good time to do it, a good time to add. I think, it's actually what I'm going to do right now. But sometimes after close on trend days, you can get a push down and you might be able to get a couple more points. So that would be at least, my answer for that. Okay. Cool. Well, I guess any other questions, or we can wrap up. All right. Well, thanks everybody. I appreciate you all joining. I will send out the recording and everything, and I'll post this to my YouTube channel and everything. But yeah, let me know. Send me a DM or whatever if you got some questions. Again, it'd be great to have you in the service if you're not already in there. And yeah, we can have lots of fun. All right, guys. Have yourself a wonderful weekend. See you later.